So I think this is something that I want to really delve into a little bit. We'll take a few minutes and really get into this whole thing about everybody starting, or people starting a part-time business, a side hustle, something that generates some extra income. There's a lot of confusion regarding that. There's a lot of fear with people to do that. They will start a side hustle and then they won't declare the income. They'll sort of try and do it on the down low because they don't want to pay the extra tax, but then they also don't claim anything for it. So let's delve into that a little bit. Would you, in your expert opinion, suggest that people get a side business, a side hustle, something that generates extra income for them?
Yes, definitely. It can only help you with your cash flow. It can only help you to broaden your sources of income. I think one of the most talked about thing, if you want to become rich one day, is be financially independent. And the way to achieve that is to broaden your sources of income.
We call it MSI, multiple sources of income. You have to have MSI. You can't just work with your PSI. PSI is your primary source of income. Most people think that if I just save enough of my primary source of income, I'll be fine. And that's never going to work. You have to have multiple sources of income. And one of the big things when you start getting multiple sources of income is managing your taxes correctly. Otherwise, it's going to kill you. So get your taxes sorted out. So what are the kind of things? So I'm a salaried employee. I have my typical pension fund that I'm contributing to. I have my medical aid through work. As a salaried employee, what else can I claim back from tax every year? What other deductions can I have? I'm just now a purely salaried employee.
So a salaried employee is very limited in what they can deduct. Medical expenses, pension fund or retirement fund contributions. It's very limited really in what you can claim.
Yeah.
If you're a commission income earner, or you are independent contractor, or you've got various sources of incomes, then you can start playing with different kinds of expenses, such as petrol that you use for business purposes. If you travel from your house to a client, that's business purposes, but traveling from your house to the office is private person. So then you can start deducting stuff that normally will come out of your own pocket, can reduce your tax liability. Home office expenditure.
Yes.
There's specific rules around that when you can claim it, but it opens you up for more deductions than what a salaried employee can do.
Yeah. And that's the thing. And a lot of people, and that's the benefit of earning commission or some kind of a commission, because immediately if you are employed but a portion of your salary or your whole salary is built up on commission, you suddenly have expenses that you can claim back. How I usually explain it to people, I say any expense that you incur in the generation of an income can be deducted from that income as a taxable expense. So if you are spending money to generate income, that spend can be deducted from tax. Am I right when I say it that way?
That's correct.
Yeah. Okay, so Gideon, when you start a part-time business, what are the kind of expenses that you as a person can now suddenly deduct from tax because of the business that you start?
Just before I give a brief explanation on that as well, you have the option when you submit your tax return to ring-fence your losses or income on a specific, let's call it the income silo.
Okay.
So you've got a salary that you receive and you get a business income you receive.
Okay.
So that business income, let's say, is a second silo of income. If that is constantly a loss, you've got a choice. Either you can tell SARS, keep track of this loss. I don't want to utilize it against my taxable income. I want to keep this for the day that I do make profits.
Okay, so you then roll it over to the next year.
Yeah, but that's an option. You don't have to. You can offset it against your salaried income and then get that tax refund to help you with your cash flow and maybe grow your business. And you've said that basically correctly, any expense in the production of income.
Okay.
If you have an expense that you have that you normally would not have had if you did not have this business, you can deduct it.
Okay.
So with regards to traveling as well, obviously use your very same car that you travel for business purposes and for private purposes. SARS will require you to keep a logbook, just to keep track of what's personal and what is for business purposes, so that you can split for private and business purposes.
And then once you have that logbook, the expenses on that car get split in that percentages, all the expenses of the car.
That's
you put
correct.
tires on, fuel, services, insurance, all of those things. So guys, let's say for example, you can prove through your logbook that 30% of your travel is for business purposes. Then 30% of all your expenses on your vehicle can then be deducted from tax.
That's correct.
Basically, SARS is refunding you those expenses, not directly, but in a sense, refunding you those expenses.
Yeah, that's correct. We call those running costs. So anything you put into your vehicle to keep it going. But there's another hidden expense, a free expense.
Yes,
it's called
I like free expenses.
It's a wear and tear.
Okay.
So it's a proportion of what you use for
The
business,
value.
of the value of the vehicle that you can write off over a certain period of time.
Okay, so like what do you call it? Waardevermindering, they call it in Afrikaans. Depreciation. That was the word. See, your English isn't that bad. So the depreciation of the value of the vehicle because you are using it, and that percentage also gets deducted.
Yeah, any capital item that you buy. So a capital item is something that you're generally going to use
Like a printer at home.
You're going to use it for more than 12 months. That also, you can write off that cost on the period that SARS allows it, 3 years, 10 years, but every year it's basically you need the equipment, you're going to invest in that capital expenditure, but you can write off that value over a certain period of time.
Okay.
It doesn't affect your cash flow,
Yes.
but it's a basic, I call it a free expense.
Yes, exactly, because it becomes worth less and less and less, and you're getting that, and they're basically subsidizing that capital expenditure for you because that thing is becoming worth less. If you can give us a list, or the listeners a list of some of the expenses that they will suddenly be able to claim back once they have a home-based business. What are the kind of things that they now can claim back which they couldn't claim back when they were just a salaried employee?
Okay, so if you've got a home office, if you're renting a property, you can claim back a portion of that rent. If you're a homeowner, a portion of the bond and the bank fees. Unfortunately, the interest. And the bank fees. Unfortunately, not the entire bond repayment, because the majority of the repayment is capital in nature, which is not an expense.
But in the beginning, when you just buy the property, the biggest portion is interest. So then it's good because that interest you can claim back.
Yeah, and sometimes that interest will work out more than what it would than you going to renting a small office. If you've got cleaning staff at your house, you can proportion that to some of your expenses. If entertainment expense, if you take a client out to lunch, to dinner, that is also a deductible expense. Just to jump back to the home office expenses, it needs to be proportioned.
Yes.
So if you take the home office that you have, and that's a percentage of the square meterage of the entire house.
So it's the entire house, not the property. Doesn't include the garden and the whole thing. It's the house square meterage.
It's the buildings.
The building.
All the buildings on the property, excluding the land. So it's not the land.
Square meterage.
But all the buildings. If there's more than one building on the property, you need to consider all the buildings.
Oh,
in the
okay, like
property.
if you have a granny flat or something.
That's correct.
Part of it. Okay.
Yeah. You can claim internet as well, telephone expenditure. It's a bit difficult because usually with your uncapped internet, it's you pay a fixed amount every month, and it's difficult to not proportion to prove that this is for private use, this percentage was for home office use.
Okay.
But that is also what I usually tell people is get to. I know it sounds like a stupid expenditure, but if you have, let's say for instance, uncapped fiber at home, use that solely for business purposes, get a 3G or different type cheaper limited, which you use for private purposes.
Okay. Couldn't you just take your fiber and also take that same percentage that you have your office and justify that you might, let's say, for example, my home office is 20% of my total area of the house. Couldn't I then justify and say, well, 20% of my fiber I'll claim back as well?
You can try that, but I don't think you'll be successful in that because if you watch Netflix over the weekend, you're going to use much more internet than sending and receiving emails during the week.
Okay.
So that one is a bit tricky when it comes to the internet, but that is also something you can claim.
Yeah, one of my opinions and approaches to tax is always ask for forgiveness rather than permission. So you try, and if they say no, you say, oops, sorry, what should I do? So that's just me personally. Use it, don't use it. Okay, so those are some of the expenses. Also, we've spoken about vehicle expenses. That's a big one. If people start to be able to claim back some of their vehicle expenses, that's huge. It suddenly becomes a big expense that can be claimed back.